All right, welcome. I am Magma. Have some theories that have led me to believe I may have found more clear and quantitative and consistent answers. Per the request of everybody and their mother, I'm making this video to go over three concepts: the double valid pullbacks, the higher time frame POIs, and the invisible zone, which is the meat and potatoes of all of it. I actually get most of my higher time frame POIs from the invisible zone, but there are higher time frame POIs that do occur outside of that. I did take a short here because of the double valid pullback and because we were in this higher time frame POI. I think what I did was took an entry once we crossed right here. Once we crossed right here, and then the stop loss ended up being 7 points, so not bad. The real good stuff is over here on these double valid pullbacks that occur on higher time frame POIs. So let's just get into these one by one. Double valid pullbacks. Those refer to candlestick structure. First thing I should say real quick is that I am a believer that if you are like fairly new, not even just fairly new, even if you've been doing this for years, but you are not professional, meaning you're not at least at the level where you're able to pay all of your bills consistently with trading, then you should not be trading the seconds time frame. I don't even have the seconds time frame. It's right here, but if I click it, it says I need to subscribe. Even though I am profitable, don't really have the experience under my belt, I don't feel like it's a very safe bet to be doing that early on when you're just trying to learn how to read price and write narratives. You need to be able to see it happen with enough time to react to it. Otherwise, you're going to be making a lot of mistakes and you're going to be thinking that the market is lying to you when it's not in general, but in the lower time frames, perhaps it is. On the 5 second or the 15 second or the 1 second, you might see a double valid pullback in your POI, but then you get wicked out or you get a closure above, and so you go long and then it takes you out because on the higher time frame, on the 1 minute or the 12 minute, it was just a wick. Like, I'm not knocking the seconds time frame. I just think that the use for the seconds time frame should be for people who they are so good and advanced that they were making unlimited money on the higher time frame and they now want to spend less time in the market and make the same amount of money. You're looking for the structure on the 12 minute and you're looking for the confirmations on the 1 minute rather than looking for structure on the 1 minute and looking for confirmations on the 5 second. Let's talk about a double valid pullback. So first of all, if we want to find a double valid pullback, we need to first know what a pullback is in general. To find the double valid pullback, you need a single valid pullback first, right? So we see prices moving up here. A pullback is what establishes a high or a low, not necessarily a protected low or high, but at least a valid one. So for instance, we have a high right here because we have closed below it. If we never closed below this entire candle, then this isn't considered a high. A valid pullback occurs when you get a closure below the highest point of the leg. Up here, this is the highest point of this leg. This is a pullback right here. If you have any prior knowledge about valid pullbacks or double valid pullbacks and you've been in my group for a little while and you've heard me talk about it, you might be looking at this thinking, well, what the hell is this, Magma? This is a double valid pullback and we should have gone short, but then it failed. The problem is that we're not in a higher time frame POI. So if you're just using your 1 minute time frame, you're going to get screwed. Right when we close below this and get the double valid pullback and you set your stop there and you set your target right here at this internal low, boom, your run through. That is because there's nothing to the left right there. There's nothing here, nothing right here. So why would a double valid pullback mean that price is going to turn around? It just doesn't. I'll go over a couple examples of a pullback. Here's the highest point of the leg. Here is a closure below it. That is one pullback. For instance, here is the highest point of the leg, no closure below it, so no pullback. Right? Once we get into this higher time frame point of interest, we see the highest point of the leg right here, and then we see a closure, a body closure below the candle that puts in the highest point. That is pullback number 1. We close this candle, and then again, we put in this high right here. So let's get rid of this one. And then over here, we close below it, which is why our entry is right there. That's the entry right there. Once we cross this line here, with a closure, and then we're writing price down to a few different points. 1, 2. One of the people in my group took this down to 67 points today while I was on live shorting it myself as well, which is super exciting. And I think actually someone else who wasn't even on the live, who I explained double valid concepts to last night, took the short as well, which is just incredible. As you can see, it works really well. So the idea here, the same thing, we're going for 2 valid pullbacks in our POI. So here we have our POI, and then here we have the double valid pullback. We have failures to make the double valid pullback over here. Like we have a high, but we never close below it, so it's not an actual high, so it's not an actual pullback. We have one here, but that closes above it right here. Once it closes, we have to restart and look for a counter to restart. So you're looking for 2 valid pullbacks in a row to occur before you get a closure above the latest high. Right here we have this high established. Let me just clean this up real quick, hang on. We have a high established because it's the highest point of the leg and because we close below it. Once we close below this, we're looking for the next highest candle to close. We want it to close below this. This is okay. This wick out is okay. This is something that a lot of people were asking questions about in the chat today. It's okay for this to have a wick above it. You are watching for the closure. Once this puts in this high here, and we have this candle here, we're looking for a closure below the highest point of this leg right here. Once this closes below it, this is a pullback, which means this is a high. And that means that this is a high that failed to close above this high. And when we have a failure to close above the high, a double valid pullback, we have a failure to close above the high, we should expect the low to get run. And your target is at the low, internally at least. So you can, I mean, obviously you could get like way more out of that. I knew that this was a turning point for price to bounce because it also came from a higher time from POI. I called 200 points yesterday. Of course, I would like to talk about that, right? Why wouldn't I? I think it was at 58, maybe 11, 58, 56, I don't remember. Basically said, if you close above 781.25, you can hop in and hold that to the moon. I'll show you guys so you believe me, because I know that this is important stuff for people. So 10:53, which is, I'm Central Time, so it's 11:53. 11:53 right here. I saw that we were establishing a little bit of a low here. Close over 781.25 is higher low. And then I said some about, before that, if higher low confirmed, ride that until the moon up top. So once we close above here, the higher low gets established, and the entry was market, and the stop was down here. It ended up going 200 points, which in my opinion really is to the moon. I mean, that's a substantial amount of money, even for just one contract as a runner. That's a $4,000 contract. Let's talk about how this happened. So I think I actually wrote a story about how it happened. Let's go through it. I was gloating. I said you can hold it to the moon. It had only gotten to 75 points at that time. I said let's break down what happened. So the first thing is on the 12-minute we failed to take the high up top, right here. So we ended up running lower. Because we failed to take the high up top, we ended up running lower. Price was marching down, and then we entered into a POI, a couple POIs. One was right here where we bounced, and another was right here. So we were very close to these point of interest, and I'm calling these POIs, they're part of the Invisible Zone model, which I will be going over on this video as well. Price peaked out, but failed to close. If you zoom in here, price is coming down, and then we get another little breakdown here. On the same leg, we set a new low, and we go and we break the high that we came from, which to me screams that this is a range that we've established, a very small range that we've established. And we could have possibly just stepped out of the range on both sides at the same time. I'm looking for a new low to close above our established low. That would give me a higher low because of the double valid pullback. Here's pullback number 1, here is pullback number 2, and then we go up. So now because of this, the next thing we want to see is the low get run. So when we see this fail to take this high, we want to see the low get run. For price to continue down, we expect to see the low get run. It doesn't get run, right? Price doesn't get run. Then we make a pullback above this low. This is a low because we have this low put in, and then we have the candle that put this low point in is closed above. That makes it a valid pullback. That makes it a valid low. That makes this a failure to come and take this low because we get a valid pullback here. Now we have a low that occurred above the low that we needed to see get run. So we wanted to see this low get run, but it didn't. And we know it didn't. We know it failed because we closed right here. If this candle didn't close, let's say it wicked, you would most likely see price come even lower. We know that because we closed above this, this is a pullback, which makes this a valid low. Not protected low necessarily, but it is a valid low. It's not protected until it runs the high it came from, but it is a valid low right now. If the high that made that failure low is about to get clapped, so this would be the high that failed to take the low, right? This high failed to take this low. So we know at the very least this is going to get taken out once we cross here. We know the very least. So this is TP1, and then obviously you've got another runner up higher for the external. God, this is like really hard to explain when I can't be there with people to let them ask questions. Okay, here's a good example. So for instance, this is an invisible zone mark out, and so is this as well. So let's zoom in and see what happens. So we have a 12-minute POI, and then let's look what happens on the 1 minute on the candlestick structure. Very zoomed in. So price comes down. This is the lowest point, and we need to see a closure above here. Price closes above here, comes and makes this other low point here, and then it closes above that, which means now we know that we have a failure to come take this low. We get a valid pullback that occurs above this pullback. This is a pullback, so this is a low. Not a protected low yet, but it's a valid low. And then we have another valid low here, and we have a higher valid low. When you have higher lows, you expect higher highs, right? So once we close there, right on this candle, we expect this to work out for us. This is very common to see price come up for the first scalp and then come for the second touch, and we put in this low. We know it's a low because we close, and then we put in another low point with this red candle, and then we close above it, and then we can take our entry at market, or you can wait hoping that it comes down. I like the market entry though, especially when you only have to take like 7.5 points of drawdown. And this all started because, you know, we had a double touch at our higher time frame POI, and then we had a second double valid pullback right here. And yeah, I mean, the rest is history, right? Here is our lowest point of this leg right here, and we get a closure, so that's one pullback. And then here is this lowest point of this leg, and we get a closure. And so once we get that closure, we can enter. Obviously lots of risk on the table when you're using the 12-minute. You want to refine this, but just don't pay attention to the points. Imagine that's not the instance, right? Because we're looking for this high. I love taking profits early. If you're in my group or have been for a while, you know that I'm crazy about doing that. We bounce, we do a valid pullback right here, we do a valid pullback right here, and if you were to market enter and have your stop here, you would be fine. Typically when price is so far away from where it bounced, I do like to wait for a double valid pullback to occur after this is established here. Don't count the first pullback that happens on the bounce, count them here. So one, right, and then we have a low get put in here, and then once we see a closure above it, which doesn't happen until right here, you could watch for an entry from the last failure. This is a little invisible zone thing, but I'm going to talk about the invisible zone in just a second here. Oh, look at that. How? Seems impossible, right? I mean, I just eyeballed that from a bird's eye view. I didn't even look really in detail over here and scope out a zone or whatever, right? So what happened here was the invisible zone, but let's zoom in and find the POI, and let's just extend this out. That way we know where we're at. So we did wick into it, which is great. That's what you want to see. Final double valid pullback. Then I'll shut up about it and we'll talk about the invisible zone. I'm sorry. Someone asked me about this. I think it was NAB. If you get a pullback right here and the next candle closes it, and then you get another little down candle and then you close above it, is that considered a second valid pullback? Yes, that is. Once you close there, you can market enter there. The second touch provides opportunity too, though. We have our low here that we need to get below, but we fail to, and then we close above the candle that fails to. We come a little bit lower, and then we close above that candle, and then we can take our entry and we can target the bottom of the highest candle here, which is what I always use. I know everyone sees me do that a lot. This is kind of, wait, my bad. This stop loss is wrong. The stop loss is below, stop loss goes below this one, below the second pullback. Okay, we're done with the valid pullbacks. Next thing we're covering is the invisible zone. So how did I draw this out here? I drew this out between our protected low to the left. I'm considering this a protected low because it broke this structure right here. It's a pretty damn responsible low. I call it the responsible low, actually. On the way down, I'm anchoring from the responsible low to recent failures. And so here I'm anchoring to this recent failure. And when I say failure, I mean a low that failed to send price to take the high. Here's our high. We come down, we make this low, and then we fail to make a high, right? So that's where I draw this out, from the responsible low to the most recent failure, which is, I think I put it a tick high on the blue line. The first invisible zone, so you go from your responsible to your first failure, which is right here. Why did I put that there? Because this is the first failure. First time we see a failure on this whole climb, we put in a high, we pull back, we put in a low, then we fail to take the high. So we're dragging from here to here, and then this is where we look for price to bounce. That's bounce number one, and then bounce number two happens from the low, so then it just follows the most recent failures. It oftentimes will repeat itself, so you get this first bounce here, and then it doesn't come below, and so because it does not come below, we do expect it to run the high that it came from. When we're getting this low and when you see that we've broken this low, we shift gears and we look down to the left. So when we break the low that we've been basing our invisible zone placements off of, our responsible low, we're gonna go and look down to the left to our next low. I often find that it is between what I call the low hanger and the low down to the left. I know it sounds made up right now, but trust me, I'll show tons of examples of it. Oftentimes, once we break this responsible low, we get a double bottom, and then we go pretty damn high. And then you can actually see it repeat itself. On the higher time frame, we have this responsible low. We have our first, right, so we get a bounce here. So we never break below it until we do, right? Once we do break below it, we're anchoring to our most recent failure. I said our first one is the first failure, our second one is the most recent failure, which is right here. You zoom in on the 1 minute flip occurrence happen right here, and you can take your longs, it comes back, you can take another long. Now, looks like we're failing to get out of here, and if we do come and break this low here, let's see if we do. So if we break this low, we're gonna look down to the left. Right now, this zone is moving. It's migrating from here to here. Why? Because this is a failure low. This low failed to get us out of here. So we're gonna base the responsible low with the failure low. That's how we anchor them. And then maybe look for a flip here. So we get one, and obviously you would want to zoom in on the 1 minute to be able to identify this. As you can see on the 12 minute, it's probably going to be very identifiable. If I go to the 1 minute, I'm going to start ranting about double valid pullbacks, and I'm sorry, you're just going to take my word for it. This is the line I just drew. That's where we bounced. Imagine you can get along, let's say like right here or something. So we do get a bounce there. Let's see how strong the bounce is. As you guys can see, by the way, this is no sweat. What I'm doing here is no sweat. You may have just seen that and thought, oh my God, he didn't even look over here. Like it's real. I'm gonna say it until I die, and people are gonna think I'm crazy, and they're never gonna want to do it, and they're not gonna make the 78 point move we did today or the 200 point we did yesterday with ease, because they don't want to believe in the invisible zone because it sounds ridiculous. You know what I find ridiculous? People trading for multiple years and not being profitable. So this is real. I'm showing you. You've seen it bounce every time. Zooming out, here's a even better example. Let's go with maybe this one or this one. It's sometimes hard to tell which ones. As you see price get into this area, we're looking for the bullish behavior to begin on the lower time frame. Price gets into this area, and it, just full sends, honestly. So our low to our recent failure. Price came down, it failed to come and take the high, failed to go back up. We expect price to come down here. And then it just goes, man. Look at that. That's insane. Right, so let's look for an invisible zone example here now. We're gonna currently be anchoring here, and our anchors are first failure. So we do get some bounce down, and then our second anchor occurs right here, and we touch here, and we do get a bounce down. and then our third anchor would then occur right here. So if we don't bounce here, then we could expect price to come into this area. So we don't bounce, we run it, and then price comes up there, and then it looks like it does give a little bounce for 230 points. So even in a very strong bull market, we're able to identify where some bounces are going to come from. So we talked about the invisible zone a little bit. I will touch on it some more before the end of the video, don't worry. Let's talk about higher time frame POIs. POIs means point of interest. Based on, pattern recognition and historical data, that's where we look for price to bounce. So I would be able to identify higher time frame POIs by the invisible zone and by looking at candlestick structure when we get to certain highs and lows. So for instance, when we get up here to try to take this high and we get a double failure, this high is a POI for me. This actually does appear on the 12-minute as a spike. And right here is a double valid pullback, and so that's why, don't let me start on the double valid pullback, but we put it up, we put another one up, and it's lower than this one, and we close below it. Once you close below it on that, you can take your market, put your stop there, and you can short the low. That's a double valid pullback that occurs in a higher time frame POI, because look at the 12-minute. What we were just looking at occurred right here. Look for the double valid pullback to occur within it, and it does, and you take your short. So the high becomes a POI. Becomes a point of interest because we're interested in it. Why are we interested in it? Because price makes decisions at highs and lows. Price comes up here, and are we going to take it? We don't know. Let's see. POI, we're just watching. When we get a flip, like we're hoping for, so that we can participate, we get a double valid pullback, we enter our short, and the rest is history. Once we get down here to this POI, clearly it's at these lows. I'm drawing this not for it to just touch the line, right? I'm drawing a zone. You have to remember that. The zone claims to expect to break these, but respect these. The zone claims to break this, but respect this. And so we're looking for the flip in here. The closer we get, the stronger the confluence, right? If we start to get a flip up here, I might not take it, but this close, we're pretty damn close right here. That's enough for me. We did take this trade, I'll tell you that, and I don't think I was the only one. So the first bounce comes from your low to your first failure, which occurs here, and we see price bounces here for a pretty juicy long. I believe the same thing is happening here though. We have the responsible low, we have our first failure, we have 50%, and we get a bounce, a double tap, and another long. This one's good. So we have our low, and we have our failure here, and we have a bounce, and we have our low, and we have our failure here, and we have a bounce, and it even comes between these, which is good because this is technically the actual first failure if you think about it. And then it repeats itself. We have a low here, we have a failure here, so we expect a bounce right here. Our low, our failure, 50%. This one gave a bounce. Oh yeah, it was that's a wick right there. That's 100 points. Our low down here, we've got our low hanger right here. So let's just let price play out. If you zoom in you're on the 12-minute here, you can see right here, you would be able to find a bounce on the 1 minute, and you'd be able to get 61 points out of it, which pays the bills at the very least. And then we're gonna anchor to the lower one right here and see if we can get a bounce there, which we get a double touch. Why did we move it? Because we were here, and then we anchored to our next one, which is our failure right here, our failure to break up to the upside. We touch. Oh yeah. Plenty of points. I don't know if you can see the invisible zone occurring on the lower time frame. Well, just like more zoomed in, but there's one there, so we're anchoring from here to here and from here to here. Now, if it does come and break below this low, then that's when we look for price to anchor from here to the most recent failure. So that would go down to the left. I just played price out a little bit, but I started having a coughing fit. Price will come down and break through this low. Once we see this low get broken, we want to anchor to the failure low, which is right here, the most recent failure low. So we're now anchored from the low down to the left to our most recent failure low, and that's where we expect to see another bounce. And it looks like it did give another 120 or so. So anyways, that basically sums it up. We have the Discord group. I'm trying to look into getting it more organized and kind of in more of like a systematic approach. That way we can get everyone the help that they need, and be able to allocate more of my time to it. Have to work on getting it a little bit more organized as well. This is how I trade. To sum it up, I use invisible zones to mark out my higher time frame POIs, and I look for double valid pullbacks on the 1 minute to confirm the reverse. The double valid pullback happens in the higher time frame POI, and the higher time frame POI comes from the invisible zone. You can get higher time frame POIs from other places. Like I said, I did take that short based off of this hidden S&D here today. Once I saw on the 1 minute the flip. So higher time frame POIs doesn't just apply to the invisible zone, but it's very, very helpful. As you can see, my Discord is Magma Pject. I believe that that's my Twitter as well, Magma Pject. So I don't really post much on there, but I probably will in the future. You know, look at Cam today, 2 trades, 4 contracts, right? I thought it was just 2 contracts, and then still 100% win rate. We had Anesthetic. Looks like he had a 100% win rate as well. DJ Azra said he was using the invisible zone all day and on a real live account and just raking in the dough. Profitable day following magma zones. Yeah, so just all kinds of good stuff going on here, and I'll probably start to post more about that on Twitter. All right, guys, so that's basically it for now. I'll make a part 2 sometime. Once I can collect more questions from everybody, I'll make a video basically just answering all those specific questions. But until then, have a good day. See ya.